Good afternoon, and thank you for joining us today. My name is Alina Islam, and I'm part of the research team here at Red Cloud Securities. Today's webinar focuses on Aris Gold Corp, an America's focused gold producer and owner of the Marmato Mine in Colombia, where a major expansion program to increase production is underway. Aris also owns the Jubilee Project, an advanced stage gold exploration project in Ontario. Today we have with us Andrew Gubbles, Senior Vice President Corporate Development from Aris Gold. For the webinar today, Andrew will provide an introduction to Aris Gold, including an overview of the construction activities underway at Marmato. Andrew may also discuss upcoming catalysts that are on the horizon for the company. After the presentation, we'll take your questions live. Please send us your questions via the chat box and we'll get through as many as we can. Participants, you can type in your questions into the chat box at any time during the presentation. To start, we'll handle the disclosures and then get into it. For Aris Gold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Aris Gold corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular needs or situations of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Aris Gold specific disclosures. With that, I'll hand it over to you, Andrew. Please take it away.
Thank you, Alina. All right. Okay. First off, thank you very much for having me. I'll provide a brief intro for those of you who don't know us. Aris Gold is led by an executive team and board that have a track record of successfully building globally relevant mining companies, including Leah Gold Mining, Endeavour Mining, Gold Corp, Wheaton River Minerals, and Yamana Gold. We're starting our journey to build our next company with an initial asset in Colombia that upon its construction will become a cornerstone asset within our portfolio. Our strategy is fairly straightforward and not that different from what it was before with Leah Gold and Endeavour Mining. We'll create value by adding scale and diversification. We'll optimize the assets within our portfolio, invest in exploration, and actively manage that portfolio as we grow the company. Let me give you a little more information about our assets. First, following a discovery of a large porphyry mineralized zone below the historic Marmato Mine in Colombia, we plan to build what will become a modern, long-life, low-cost mine capable of producing 175,000 ounces of gold per year. What are some of the highlights? Well, with a 30-year operating history, Marmato has an established social license in a secure and mining-friendly region of the country. Funding has been raised, and the major mining title extension permit is in place for another 30 years. We're now actively working to modernize the current upper mine operation at Marmato. And as of last week, we've announced we're moving forward construction of the lower mine expansion project, which will transform Marmato into that larger mine referenced earlier. Recent drill results have confirmed the quality of mineralization at Marmato, which were announced last week, and I'll elaborate on these results in a little more detail in the presentation. We enjoy strong community support, and we're confident that Marmato will certainly become the next major gold mine built in Colombia. To clarify for everyone, the Marmato mine is made up of two distinct mining areas delineated by style of mineralization. First, the existing upper mine, which you see located between 1,000 and 1,300 meters above sea level. It's characterized by narrow vein mineralization, where cut and fill mining methods are currently deployed. We're presently producing about 24,000 ounces of gold per year from this mine, and this is the year where we're undergoing a comprehensive performance optimization program to upgrade what has traditionally been an undercapitalized operation. In contrast, the lower mine expansion, which exhibits wide porphyry mineralization below the 1,000 meter mark, is suitable for long hole stoping mining methods or bulk mining. This resource has been considerably expanded and has even further growth potential. Per our announcement last week, we plan to start construction of the lower mine later this month. As you would have seen, last week, Aris Gold was pleased to announce an updated mineral resource estimate at the Marmato Mine. The new resource included drill results from approximately 80% of the 35,000 meter program that preceded the Marmato Expansion PFS in early 2020. The drill program had two key objectives. First, to convert inferred resources to indicated resources, and second, to test areas along strike and depth. The new holes extended the known mineralized zones to over 800 meters vertically. That's over a 60% increase from what we had before, and 950 meters along strike, mainly to the east, which is approximately 90% more strike length than we had before as well. As a result, the measured and indicated resource increased by 42% to 5.8 million ounces, with the lower mine resource increasing by, measured and indicated resource increasing by 81% to approximately 3.8 million ounces. This underscores the quality and interpretation of the mineralized zones and the potential we see for even further additional growth. Further, we've commenced work on preparing a new mineral reserve estimate and a refreshed PFS based on the updated mineral resources you see here. As a result of these positive results with the mineral resource, the gold production profile we expect to see in that new PFS should be able to extend the mine life years beyond the 2023 we have in the prior PFS. Before getting into more detail on the lower mine development update, let me provide you with information, a brief update on the upper mine operations, where we prioritize a number of key initiatives to improve performance. First, we put in place an experienced senior operating team with trusted mine GMs from Leia Gold and Endeavour, now leading the team in country. We're actively investing in plant upgrades, refurbishing the underground mining equipment, and instituting preventative maintenance programs to improve plant capacity and milling rates. To address excessive dilution at the mine, we've implemented 3D mine planning and modeling, which will substantially improve grade control. A workforce rationalization program is now well underway, which includes new mine shift schedules whereby workers are incentivized to relocate to the site camp at Marmato, thereby reducing absenteeism. We've been quite successful with this program to date. We're also introducing, on the cost side, new cost management programs, including an ERP system to better control purchasing and procurement. And then finally, we've been implementing upgrades to the tailings storage facility site to meet Canada Dam Association guidelines. As a result, what we aim to achieve in the upper mine is increased productivity, higher production, reduce operating costs, and an overall improvement in health and safety at the upper mine. Now onto the lower mine. Again, per our recent news release, we've made great progress advancing the lower mine expansion project. And as of this month, we're ready to start construction. Several optimization studies were completed following the appointment of Wood Group as our EPCM contractor in April, with detailed engineering currently in progress. We appointed the former project manager at Continental Gold's Buriticá mine in Colombia to lead the lower mine development at Marmato. An amended environmental plan, or PMA in Colombia, was submitted to the regional regulator Corp called this in May. Now, our permitting team is currently responding to requests for further information with the expectation this will be completed by the end of the first quarter of next year. As a team, we decided to retain a mining contractor rather than purchase an owner mining fleet. By using a mining contractor, we expect to speed up the development of the lower mine and also increase overall efficiencies. Further, we expect the development capex at this stage to remain roughly in line with the PFS estimate of US $270 million after factoring in that decision to use a mining contractor at Marmato. Now, having put the right people in place and made a construction decision, we are ready to build the lower mine. This starts with the camp administrative areas, which will happen later this month, then follow with the new portal and decline in December. Construction of the new plant and the mine workings itself, we expect to happen in the first half of 2022. Our target is to have first ore from the lower mine expansion project by the fourth quarter 2023, ramping up through 2024 and 2025. The approximate $270 million of development capex will be spent mainly on land acquisitions and mine development, which includes, again, a new ramp and decline to access a new set of mine workings, a new 4,000 ton per day carbon and pulp plant, dry stack tailings storage facilities, which will handle tailings from the combined upper and lower mine, at a new project camp. Marmato is supported by excellent infrastructure with access to the Pan American Highway, Cauca River, and national electricity grid. Upon development, the expanded Marmato mine, we believe, will have all the characteristics of what will become a core mine within our portfolio. Again, on the basis of that updated mineral resource estimate, which saw global resources increase from around 6.3 million ounces to 8.4 million ounces, and following the future completion of a new mineral reserve estimate next year, we see the potential for an updated gold production profile to extend beyond the 13 years that were defined in the original PFS. Inclusive of a fully optimized upper mine, production will exceed 200,000 ounces of gold per year in the first few years of production. Post the lower mine ramp up, then average over 175,000 ounces per year while both the upper and lower mine are operating over that mine life. Further, operating costs and capital intensity are expected to remain relatively low, given the devaluation of the Colombian peso and the proximity to existing support infrastructure, as well as the potential synergies of the lower mine with the existing upper mine operation. Now, our second asset is a Jubilee exploration project, which is located in Canada's highly active Abitibi Greenstone Belt. Jubilee is located on the same mineralized trend as IAMGOLD's Cote Lake deposit and approximately 70 kilometers from Alamosa's Young-Davidson mine. There's an initial 2.3 million ounce pit-constrained resource that was estimated based on historic drilling on the property. Following recommendations from the October 2020 mineral resource estimate, we initiated a 10,000 meter drill program to allow us to better understand the deposit's potential. We've expected, and we do expect to see results back from the labs in this quarter. We've received many of them to date. And following an evaluation of these results, we'll determine the next steps for further exploration at Jubilee. Now, different from many other companies with major development projects, we have a strong financial position with over $150 million of cash on the balance sheet and another $76 million of committed funds from Wheaton Precious Metals, which will come in tranches as the project is developed. That totals over $230 million of cash available for growth. Now, this doesn't account for the future cash flow that will come from the upper mine through the development period. Our shareholders are very supportive of our strategy, with the board and management owning approximately 8.5% of the company. Gran Colombia remains our largest shareholder with approximately 44% of the outstanding shares. They've committed to vote in line with board and management, not sell without approval until February 2023, while they hold over 20%. Again, we expect our free float liquidity to improve as we build out the company, build out the portfolio of Aris Gold through M&A. Now, it's important to note that Aris Gold is building on a strong and healthy social license to operate in Colombia. We hope to nurture and further enhance our local relationships as the company grows. This all started with a whole new set of corporate policies when the Aris Gold took over in February, and continue with the publication of our inaugural sustainability report, which further demonstrates our commitment to transparency in this regard. Going forward, we've committed to a minimum US $25 an ounce social investment fund at Marmato to give back to our communities. We've also established health and safety, environmental, and ethics management systems in order to track key data and identify areas for improvement in the future. Finally, I'd like to re-emphasize the strength and experience of our leadership team. With Neil Woodyer as our CEO, we have much of the same management operating team that created and built Leagold Mining and Endeavour Mining. We already know many of the industry leaders on our independent board of directors, including Ian Telfer, former chair of Gold Corp, Peter Maroney, the executive chair, current executive chair of Yamana Gold, and David Garofalo, former CEO of Gold Corp and Hudbay Minerals. Adi Rue, who's the former COO of Leagold Endeavour, is our current chair of our technical committee. Danielle Cambone, the former editor-in-chief of Kitco News, and Serafino Aquino and Hernan Martinez, who are resident Colombian experts on the board nominated by Gran Colombia. The board of directors also enjoys the support of Frank Giustra as a strategic advisor. So to sum it up, why invest in Aris Gold? First, we believe we've got a proven leadership team that's personally invested and aligned with shareholders. We're transforming a historic gold mine in Colombia into what will become a cornerstone asset as our first investment to build our company. We've got assets located in prolific gold regions with plenty of exploration upside. We have a strong financial position with $233 million of cash, future cash flow from the optimized upper mine operations, and unique access to capital to fund future growth. We're building on a well-established social license to operate in Colombia, which is very important. And as a team, we're grounded in good governance, responsible mining practices, and sustainability. The combined market capitalization of Endeavour Mining and Equinox Gold, two companies this management team had a hand in founding, is now approximately Canadian $10 billion. Starting with Marmato and Jubilee, Aris Gold is well on its way to building yet another globally relevant gold producer. Thank you very much. I'll open up to questions.
Thanks a lot, Andrew. That was a great presentation. So we'll start the Q&A portion of the webinar. Just a reminder to our participants, you can type in your questions into the chat box at any time. So Andrew, we do have a few questions. First off, I'll maybe start off with your Q321 results that you reported last week, specifically the cash costs at $1,344 an ounce. So the question here is, do you expect these costs to start coming down based on the optimization work that's underway at the upper mine?
Absolutely. In terms of a bit of a history at the upper mine, we became involved as a management group in around February last year. We were able to get our mine manager on site around May. He was really up and running by the summer. A gentleman by the name of Peter Berger, who was involved with Los Filos previously and Tabakoto before that. He is on site. We've been instituting this optimization program, which I outlined earlier, really from the second quarter through to the third quarter this year. That has included quite a bit of work that has resulted in a slight increase in the operating costs, especially sustaining capital and the all-in sustaining numbers, as you'd see, as we go through the process of instituting the program. We do foresee a decrease in those costs going forward, based on the forecast numbers I've seen. From an internal budgeting standpoint, we will see another quarter or two into 2022 before we see that dropping more substantially. But going forward, we are confident that those numbers will come down quite a bit from where they were in the third quarter of this year.
Okay, all right, that's great. So next question, looking ahead at the expansion, you mentioned the permitting process that should be complete by March of 2022. Is there anything that could potentially delay this process?
I guess with permitting, there always is a risk of delay. What we've outlined is in our timetable is very much what we've expected. We always understood and knew that we'd have the ability to start the long lead time items and construction of the camp administrative areas by the end of this year. That would lead nicely into the end of the first quarter when the approval would come through from Corp to really start on the mine and the plant. What we have in our favor with respect to working with Corp is that we have been operating for 30 years in the Department of Caldas. The regional regulator has been very supportive of our initiatives to date, and we haven't had material infractions of our current environmental license. What this is an amendment to the current environmental license or permit that will be approved by the local regulator. So it doesn't have to go to a national regulator. The approval process has been very cohesive between ourselves and Corp to date. So to answer the question, I guess, yes, there's always a risk, but we are comfortable with what we've been doing to date and the timeline that we've been working towards to date.
Okay, great. So the PFS was completed in mid-2020, and it outlined a CapEx of $270 million. Are you seeing any inflationary pressures on the CapEx side?
In short, we are. Not too dissimilar to a lot of other companies with development stage projects. We were the work that was done by SRK in that feasibility report last year was quite detailed. It was a well done report that the SRK team is a team that we've worked with a lot in the past, and we do have trust in some of the estimates that have been part of that PFS. That being said, there has been instances of cost inflation across the board in other projects. What works in our favor somewhat is there has been some positive devaluation in the Colombian peso. We have made a commitment and are working towards improving or increasing our local procurement to the extent possible for the project to take advantage of the currency. Also, again, this decision that we've made to move from an owner mining fleet to a mining contractor will save us quite a bit on the mining equipment and services end of things, which is in the BFS estimate as well. So by offsetting the cost savings from that, we are hopeful that will come out to a CapEx number that is more consistent with the PFS. That being said, you would have seen in our in the timetable I discussed in the presentation, we are still due to finish or complete our FEL3 design and detailed engineering. That's an ongoing process. We do have a number of those inputs, but those inputs will be finalized through the first quarter of next year is our expectation. So those numbers may still be adjusted. Again, at this stage, based on the numbers we have and the decision that we've made to swap to contractor mining, we are still on pretty much in line with where the PFS is. But again, our detailed engineering is still on foot. I think I'll just also add, based on everything we know at the moment and our expectation and where we are with the financing, we still were very confident making that construction decision as of last week. So if there is movement, slight movement with that CapEx number, we are very comfortable that we'll be able to absorb that and still have a very productive and high returning project in Marmato.
All right, great. Thanks for that. Next question here, Andrew. Can you speak to the ongoing expansion with respect to the surrounding local communities? What's your relationship like, and what's the support that you're getting from them?
That's a great question. I mean, I did say that we do enjoy community support, and that is true. Marmato has been a mining community for over 500 years in some shape or capacity. It's got, quote unquote, mining in the DNA of the workers on site. What we are able to provide and what we want to emphasize is that, and it did come through hopefully in a sustainability report, is that we will be expanding the mine, creating more jobs, and providing an operation that has health and safety really at the forefront. I know there is other forms of mining, artisan mining in around the area and throughout Colombia in general. What we want to emphasize is that we provide competitive salaries and the benefit of a real focus on health and safety in the area, as well as environmental stewardship and whatnot. And that has caught on with locals. One of the other factors that's helping us out, and one of the things we wanted to ensure was in place, was having that agreement with the mining title extension for the US $25 an ounce social investment fund. Now that's backwards looking on historic production, but as we grow the company, that social investment fund will see the benefit of, at its peak, over 200,000 ounces of gold production per year, which will be spent in the community, and there should be a tangible knock-on benefit to the people in the community, and that has been well conveyed. That benefit will be seen in the community at large. So there is good support for those many reasons as well.
Okay, so just a follow-up question on that, Andrew. How much are you spending on ESG?
So right now we are targeting that $25 an ounce mark. That is the target. Last year we spent just under $1 million based on where production was. That's in excess of $25 an ounce. Now that's just investment into the community. We are doing other things at a corporate level as well. I don't have the exact number for what the aggregate ESG budget is, but that $25 an ounce is a rough approximate of where we would budget at a minimum for the ESG spend in Colombia.
All right. Okay. Any exploration plans for Marmato in 2022?
We've been very happy with the results that we've seen with the expansion of the resource, and we still have another 6 holes or so to go. We decided to, given what we've seen and the desire to get the results out before the end of the year ahead of our construction decision, to draw the line at the June 30th cutoff before that whole 35,000 meters were complete. So we will see some additional holes that will, information will come in. As of this stage, we haven't delineated what the next steps will be for further exploration, but since we've seen the positivity in the exploration to date, we do have a team that is thinking about where to go next. It isn't detailed yet, but at this stage we do have plenty of resource, and hopefully post a reserve update, we could see an increase in the reserve as well that will underpin a mine life, that is, comfortably well in excess of 13 years, which underpins a very good quality, good sized mine. So it will be somewhat contingent on what else we can add to the ore body, but there will be future drilling on site. We just don't have that detailed yet.
Okay, so I guess similarly, and you touched a bit on this on your presentation, at Jubilee, do you have any plans going forward?
Yeah, so at Jubilee, we really dipped our toe in the water, so to speak, with the first drill program that we kicked off in the summer. And it was really a completion of some drilling activity that wasn't completed at the time. Jubilee's traded hands a few times, so we decided to go in and to complete that program, so to speak, with the view that it would get us drills on the ground, get us active, some proprietary drilling. Some of the results we've seen to date do look pretty good, but we do have to work that in with the rest of the resource model. And I, right now, actually have our VP of exploration on site at Jubilee, planning out what the next steps will be going forward. But ultimately, I think what we'd like to do is to see what we can do to improve the general quality of that resource. And it's going to take probably some future drilling to get there. But now that we've got our toe wet, so to speak, and reestablish relationships with the local First Nation groups, I think we're in very good shape to move that forward in a more meaningful way in the coming years. But that will be contingent on getting the final assays back from this current drill program, but also coordinating with our head of exploration to see where the next steps are. But we are actively looking at what will be next for Jubilee at the moment, and we'll make sure that everyone's aware of what that is when we get there. So,
all right. So we've had a few more questions come in. So what is the status of the metallurgical test program, and are you planning to develop a process flow sheet?
Assume this is at Marmato.
Yeah.
It's ongoing. We certainly will in the updated PFS. I think the next update on metallurgy and what that flow sheet looks like will be updated in that refreshed PFS. Again, the target is the first half of next year, hopefully by the first quarter. At the same time, we will move forward with again the lead long order items and start with the camp and a mid-area construction. So hopefully, I would hope to see that information in an updated technical report early next year.
Just on that note, Andrew, and I can't recall if this was in the last press release, but is construction at the camp underway?
It will happen at the end of the month.
Okay.
So we're targeting November for the new camp construction. Right.
Do you have an estimate for cost per ounce for the lower mine?
As of now, in terms of an operating cost and all-in sustaining cost, the only numbers that we have that have been made public is in the prior PFS. I urge you to look in. It's on our website as well. All the information is there. It's around $800 an ounce all-in sustaining cash cost, if I believe correctly from that PFS. Now that is again before we've taken into account for the US $25 an ounce community investment fund. So pro forma for that, we're looking at just above $900 an ounce. Again, based on the information that we have to date, without having a new PFS, that's all we can really say publicly. In terms of what we're working towards and what we've seen with respect to the more recent drilling, we do believe that we should be targeting somewhere similar in that regard. We're not seeing anything at the moment with the results that we have that would suggest it would be substantially different. But again, that new PFS should clarify and include all the latest information if that number is going to change. But sort of roughly around that high or that low $900 an ounce all-in sustaining cash cost per the last PFS, inclusive of the community fund, is roughly where that lower mine operating cost will be.
All right, sounds good. Last question here. Could you sum up by outlining key catalysts for investors, let's say in the next 6 to 12 months?
Yeah, sure. So the key catalysts, again, with the board of management of this company, we have been actively considering and evaluating M&A targets. We do have a track record of growing the prior companies through acquisition. That hasn't changed. I think what's been slightly different since we got involved is we have spent quite a bit of time working internally on the optimization program for the upper mine at Marmato and advancing the lower mine development as well. I think we've done quite a bit to fully understand what the potential is there and how to move forward. At the same time, we are evaluating opportunities, but it does free up a little more time to review those opportunities. I would always say that within the next 6 to 12 months, M&A will be a catalyst for us. How it comes, when it comes, I can't tell you exactly, but that will be a catalyst. In terms of the project itself at Marmato, the next sort of few catalysts is, again, that PMA amendment approval from Corp will give us the green light to complete or to start the construction of the mine workings and plant itself. We should see completion of the at least advancement of the admin areas and the camp sort of in the meantime in terms of construction. So the first part of next year, we should hopefully see that amendment approval, and also an update to the reserves and the PFS in the first quarter, at least the end of the first quarter, or at least the first half at a minimum, to update those numbers based on the new resource that we just published would be another catalyst in the near term. And then from there, as we move forward with developing Marmato, as we go through the construction process, we will be receiving tranches of funds to come in from Wheaton Precious Metals, which will supplement the cash requirement. At the same time, again, I mentioned early on, our hope is by mid-2022, we've gotten through and started implemented a number of those efficiencies or performance optimization initiatives at the upper mine. So hopefully by mid-next year, you'll start seeing numbers from the upper mine that are more reflective of where we could be going forward in terms of how that looks. So those will be the main catalysts. All
right, great. I mean, lots to look forward to in the next few months. But that concludes the Q&A portion of this webinar. Andrew, thanks a lot for taking time to host this webinar with us today. Just as a reminder to our audience, our next webinar will feature Altele Mining Corp on Thursday, November 18th at 2 p.m. Thanks for tuning in with us, everyone. Have a great day.
Thank you.